Welcome to Business Reporter's Best of British Business campaign. More families are turning to personal loans to bridge the gap between what life costs and how much they earn. From getting to work to keeping the household running. Increasingly, those searches begin online through price comparison sites. Today we're exploring how this digital shift is reshaping the way that people borrow and how Hastings Financial Services is helping customers find affordable, responsible lending options in a changing market, with CEO Adam Malcolm. Adam, welcome. Adam, let's start with the basics. What is an unsecured loan? How does it work in practice?
Yeah, it's a very, very simple financial product where a customer requests from a lender a sum of money. It doesn't, importantly, offer up any collateral or security like the home or car, and then they offer a promise to pay instead. That money gets transferred to them, and then they make regular payments over an agreed set of time until that money, with interest and fees, is paid back.
And these are really common, aren't they? Just taking a look at FCA data saying 4 in 10 UK adults have unsecured debt, typical balance of around about £2,500.
Yeah, I think you're pulling out two important points there. So firstly, unsecured products, which can be credit cards, loans, buy now, pay later. Yes, about 4 in 10 of UK consumers do that. And that highlights to me the need for this product and also how these kind of products help the economy, but also illustrates that you have to do it responsibly. So the fact that consumers want these products, it's not just indiscriminate, give anyone money. You need to make sure that they're affordable and you do that on the right terms. But then the second thing that I would point out from the one that you said there is the £2,500. It doesn't show that some of these products are just for luxury items. They are to help from payday to payday. Whereas the part that we play within that 40% is around unsecured loans. So that's around 7% of the UK population who have one of them, according to Mintel. And our average balances are more close to around £10,000. So we're for the bigger one-off purchases.
The way that people are accessing these products has changed, hasn't it? You used to go straight to your bank, didn't you? And now it's going online to comparison sites. Yeah,
100%. You can see that across multiple financial services products, like insurance probably being the most mature, like Hastings itself as the insurer and primarily as the insurer didn't exist 20 years ago. But then if you ask yourself, well, why is that happening? For me, it's because consumer behaviour, needs and wants are changing. People don't want to go sit down with the manager, spend an hour to get a no. They want to simply fill in one form, maximise the likelihood to say yes, and have transparent and fair pricing put in front of them for them to decide to say yes or no to.
Where do you think that banks fall short for borrowers? Is it speed, access, clarity, cost?
Yeah, so I think all three. The banks do a very, very good job. That's why they are where they are. But if you think around access, and to knock all of them on the head that you've said there, people's lives and complexity is getting larger by the day. And actually a simple way of looking at, are you employed? Have you been employed? Have you always earned a certain income? That's fine for a population. But at the same time, there's quite a lot of people who can afford the loan, can pay it very, very much back, but they don't fit that box. And that's what we call complex prime. And we try and understand those customers a lot more to give access to these products, which are an enabler, by the way, to allow them to take out that loan. Then when you think about speed, in certain big banks, they have legacy technology systems. So it can take days, if not weeks, from applying to the loan to understanding you've been approved to actually accessing the fund. We've streamlined all that. So therefore, someone can come and apply for the loan and be paid out within the same day.
And what do you do differently?
When we think about customers' need and our product, it's an enablement product for one of those light memories. Customers come for us for a loan for three things, really. Car finance, so they want a car, home improvements, or debt consolidation. And we enable that. But actually, when you think around what that means to customers, someone who needs to get to the first job, they need a car. Their average salary in the UK is 37k, but the average car is 17k. You won't be able just to have that cash lying around. So we enable that to get through that cash flow. I think the other thing that we really focus on is financial control. So debt consolidation actually allows you to get all these small little debts, consolidate it, usually save money as well doing that. And 99% you will save money by consolidating small balances into one and give you one monthly controllable. So if you think around all that worry that can go away with that, it's a great way. And then finally, it's, home is where the heart is at, actually making homes somewhere to cherish, improve the quality of life. And that's what we try and do. So I think that's, when we think about need, that's what we look at.
Can you give me one specific example of something that you've done in this space that really sets you apart?
Yeah, I think if we take it to business principles, the main thing we're trying to do is understand our customers, the journeys, and what they want more. And I'll give you one example that we've done recently and how this has transformed over years and years. When computer couldn't say yes or no, they put you in a box and they send you to an underwriter, which is right to do. But then that underwriter just said, oh, can you send me a passport picture in? So again, we used to post it, take a couple of days, they'll look at it and they'll say yes or no. But then that's not really good enough. And then what you had is digitization. You could take a photo of it. And then with this digitization, increased fraud happens. So then they got to get a photo, make you do a selfie, move your head. But what's actually happened quite recently is the rise of generative AI. So if you think of that kind of journey, customers want instantaneous decisions, but that has to be offset by an increased risk. So what we've done recently is where you can upload a passport there and then. AI will check that document, 149 checks instantaneously. It'll look at your face, it'll move to make sure that you're a real person that matches to it. But actually, one thing that we've done in the last couple of months is it's now with generative AI able to put face masks on. So we put some new technology in to actually detect whether you've got a face mask as well. And that's important because you've got to balance given what the customer's needs, but also the inherent increasing risk that this technology brings. And that's something that we do, and that's important to us because we're focused on what the customers want and how do we deliver that in a safe and correct manner.
You don't take collateral, so how do you judge affordability and manage risk fairly?
Yeah, so it's all around the customer's promise to pay. If you think around a collateral-based loan, there's two main components. Do you trust the customer to pay it, and do you think they can pay it, and can they afford it? But then you will also look at that collateral and say, is there equity in there, like a house, etc. With the unsecured, it's not. It's all around the trust of the customer. And for me, therefore, the better we understand the customer, the better the decisions and the lower prices we can. So we do use data heavily to enrich, to understand, to get under the nubbins of why the customer wants this, can they afford it, have they shown the right behaviours, and then we make good on that promise.
Talking of data and trust, who sees this data? How do you use it? And how do customers stay in control?
It is customer data first and foremost. So our responsibility with them is to be compliant with all the regulatory needs that we need, GDPR, the ICO, which we do. But also it's around empowering and helping customers understand why we need that data and actually how we use it. So we take the data, absolute minimum data that we need to give you a positive outcome. If we need more data, then we'll keep asking for extra bits on top. But we do that. No person can see that, look at that. That goes through our computer system. It gets minimized, it gets anonymized, and do have to store it for our regulatory requirements. If the FCA says, why did you lend to this person, we have to be able to pull that data. But it isn't accessible for everyone else, and it is locked down.
Finally, Adam, for anyone considering an unsecured loan with you or with anyone else, what actions should they be taking?
Yeah, so think, as we discussed before, it's why do you need that loan, first and foremost, and then once you understand that, who would you ask for that money? So for me, if the loan is for a price-based need, so you just want it to be as cheap as possible, I would strongly recommend that you go into the price comparison website. But then if it's for some other need, so such as your boiler blows up and your house is extremely cold and you need access to the funds quickly to fix that, then I would consider traditional lenders versus new age lenders, mainly because the new age lenders with the technology can do what the old age lenders do in terms of the decisioning, but a lot quicker. So you should be able to get access to the funds quicker there to sort your cold house out.
Adam, thank you so much.
Just thank you.
That was Adam Malcolm, CEO of Hastings Financial Services.